Hello all, and I hope you are well in these very extraordinary times. I'd like to welcome you all to the Fintech Finance Virtual Arena where I'm hosting you here today. In this special arena, we're going to be discussing payments, the payments ecosystem with none other than Mark Buitenhek from ING. So Mark, could you please give a bit of an introduction to yourself and your role at ING?
All right, I'm the head of transaction services within ING, where I cover the business of payments and cash management, our digital channels, our trade finance operations, and I'm also running a merchant acquiring business and BMG.
Wow. Okay, incredible. I mean, that is a lot of roles to fill. So you must be a very busy man, and especially handling digital channels during a time where people are suddenly working from home every day, everywhere. That must be an incredible role and an incredible insight.
Yeah, it is, and on the other hand, it also isn't. We were quite far when it comes to digitization and the usage of our digital channels in this surreal time. To be honest, we've been a bit more busy. Well, it's already 2 months ago, with making sure that our operations were up and running. Our staff is working from home. I guess my staff is now 95% of them are still working from home, but the opportunity of speeding up our plans that we had and to grab new opportunities, that is keeping me really busy right now.
I can completely imagine. I was speaking to the head of customer channels over at Nationwide, Carol Azell, and she was telling me how all these plans are only being extended purely like what they'd been working on years before have just really come into fruition. So it's very exciting to see how the pandemic has helped that. So there's always a silver lining to it, I guess. But Mark, going back to payments, the main theme of today's virtual arena, can you tell me how you've seen the payments ecosystem and the payments industry change for financial institutions like ING since you've been in the role?
Well, that's quite some time. It's now, well, I've been in this role for 10 years, but if I compare where I came from into payments, I stepped into payments somewhere mid 90s. Um, so the changes from multiple angles, from paper and cash to digital, from local standards to global standards, from speed, if you look at that angle, from weeks to hours to now seconds, and from branch to mobile to APIs. So it's a fantastic journey where basically nothing has been untouched.
Yeah, I mean, for an industry that typically had stayed the same for decades and decades, everyone, centuries even. It's so exciting to see that just purely in your time in the industry, it's completely changed. And speaking of that time from decades to years to months to seconds, the last 2 months, speaking of the pandemic, how do you think the DNA of payments has changed because of this virus?
Well, the DNA itself, I don't think has really changed. What has changed is the mix of usage in retail payments. So you see far more cards payments at the expense of cash, much more e-commerce compared to regular physical transactions in shops. Contactless has exploded. Um, so those are that I think are the main ones. If you look at by the way, the payments from business and corporates, uh, those have changed far less, except for the retail sector. There it's absolutely clear that things have changed, and now we're 2 months in this cycle, and slowly returning back to, well, not completely normal. By the way, what's going to be normal, I don't know. So we see that the POS transactions in shops are now revamping and coming back. But it's interesting to see if the cash usage will stay where it is today. We've seen a drop of somewhere between 50 and 60% in cash usage, which is extraordinary. It would normally take a decade to get there.
I completely agree. In the UK, I saw the MPs released a report highlighting that in similar figures here that cash usage had dropped 60%, and ATM usage especially had dropped 60% in the last 2 months. And I think that that's similar numbers to what we've been talking about for the last decade. Would only bring something like that along. Moving, we've obviously that there's a huge change in the way that payments have obviously evolved in the retail sector. But looking at the large transactions and other parts of banking, how do you think the pandemic has changed KYC, AML, and anti-fraud measures for those types of transactions?
But actually, the fundamentals more or less stay the same. But it's clear we need to put extra attention to it. Our customers, our employees of corporates are working from home in less secure environments. You see all kinds of attempts of people, whether it's via WhatsApp fraud or trying to behave like a CEO, the CEO fraud kind of thing. That's what we're seeing. So in that sense, that is what you typically see. By the way, you typically see that in any crisis or in any large change that people try to abuse the situation. Anti-fraud is really more, let's say, paying attention to these elements, and the KYC part. It actually is running smoothly. In a lot of cases, we already had, let's say, KYC opportunities where you can identify yourself from a distance, and yeah, that remains where it is. So has it fundamentally changed it? No. But again, it increased the speed of change that we were currently facing. We took a number of measures also on the cyber security and cyber fraud security to ensure that nothing happens. Contactless opened up, of course, also new kinds of fraud attempts. And there we're carefully watching after we've increased the limits, and everybody did this across the world, right? We've increased all these limits of contactless payments so far. Actually, it is really okay to see what's happening.
Yeah, and just for our viewers who might not know, is that the CEO phishing fraud, is that the kind of fraud where someone in the accounts department may get an email in a business, maybe 5 p.m. on a Friday, where their CEO tells them, "Oh, can you just quickly make this transaction?" And because it's 5 p.m. on a Friday and they see their CEO's name on it, they just perform the transaction. Is that what you were referring to?
Yeah, exactly. People just sending an email saying you need to do this urgently. We're all working from home, and yeah, this happens also in regular life. But when people are now working from home, these are the kind of things you need to be very aware of and pay attention of, and we warn our customers also for these kinds of attempts.
Interesting. And jumping back more to the retail side of things again, is it true that there was a significant change in ATM structure in the Netherlands even before the pandemic? And is this just continuing a trend to seeing more card adoption? And what are you doing for your customers to really enable this move from a cash-based society? I know Holland obviously wasn't, but only increasing adoption and digital adoption.
Yeah, I'm not only speaking about the Netherlands. The trends that I described in reducing the number of cash transactions that are being paid in shops, but also the ATM withdrawals, we see that everywhere. In the Netherlands, we've organized ourselves together with the other banks, where we put our complete ATM park into one collective company, a utility, and we're trying to optimize the number of ATMs. And what is going to happen here is this will help to further optimize and actually, let's be clear, decrease it. If you see a drop of 60%, that is something that will speed up further reduction. And we can see the movement everywhere. By the way, not in the beginning of the crisis, and that was an interesting thing. In the beginning of the crisis, we saw in some of our countries that people ran to ATMs and ran to branches and withdraw large sums of money because they thought there was a crisis coming. But now we see across the board the same development, 50 to 60% less cash usage, heavily moving towards either cards or contactless mobile or doing business and shop on the internet.
Wow, it's very interesting to see that there's still that hardcore trust in cash. As soon as a pandemic hits, everyone believes in that safety. But then obviously the contact nature of cash suddenly makes it almost slightly more dangerous. Um, Continuing that theme of customer experience then within retail and what customers want, how do you think that the payment services directives and the move to open banking, which I think ING, I think you guys have done an absolutely incredible job, how do you think that has actually helped institutions like yourselves handle this crisis in a such better way than might have happened if it never really came about?
Actually, if you look at the actual usage, and if you compare, let's say, Europe and the Netherlands with what happened with you guys in the UK, you've been on this for a longer time, and there you see it took 2, 3 years to see the increase in usage. The actual usage that we're seeing is still relatively small, not to call it maybe even marginal. So that has no direct and immediate impact. What it did do, of course, the Payment Service Directive laid a foundation to start thinking about all kinds of open banking, other functionalities. But we're in the process of creating them, bringing them to the market, and it's too early to call. And in a way, maybe, and I don't know if it's going to happen, is that what's happening with COVID-19, all the request of some of market parties to further delay SCA, the authentication part for online cards transaction, which by the way was part of the PSD2 implementation. So instead of, let's say, handle the crisis better, the crisis may be even causing some delay here and there.
Yeah, can actually, yeah. It's interesting you bring that example up because we were filming one of these virtual arenas, and half an hour before it went live, we suddenly got the news, and that virtual arena was about SCA. And then half an hour after we filmed it, suddenly the news comes through that there's been that postponement, and suddenly it was just all hands on deck, and that's why you never film live. We learned our lesson.
In the
Yes,
UK, in the UK, huh?
it's only extend because it was the FCA, I believe, that actually postponed it. Now, do you think the rest of Europe will follow suit after what's happened to the retail industry as a result of this pandemic?
I don't know. To be honest, no, I don't think so. There's of course, there's a push to delay all kinds of other activities right now if they're not completely necessary. On the other hand, you could also argue if more and more people are starting to buy online, then having the right security in place is maybe even more important.
I completely imagine, yeah. Oh, excellent. And now that the payments landscape is changing significantly to high volume, low low value model. What will that mean for banks in the future, and what will it mean for the role of banks going into the future?
Yeah, the high volume, low cost model, well, it always has been. It depends a bit on the market where you are, right? There are completely different markets with different pricing models and different pricing levels across Europe and across the world. But we always saw this as a scale game. Um, but indeed, you're right. It becomes even more high volume, low cost. So it could lead to more outsourcing of banks or joining utilities. So in that sense, I think that is one of the things that we're going to see more pressure on standardization, despite all the efforts on whether it's SEPA payments or what have you across Europe. There's still per country a sort of a gold plating taking place with small but very meaningful differences. If in Europe, and I'm mainly talking about Europe here, if in Europe we all start to think that it makes sense to create that one standard, real one standard that is mandatory everywhere, this could even drive further standardization and scale. And in the end, what's going to happen today, if you talk about what is the size that you need, you talk about tens of billions, and maybe the next frontier is 100 billion. So further consolidation in the industry and further cooperation between banks. Maybe to add
Mm.
one point,
Yeah.
because we're talking here about payments. Payments is not a, let's say, a pure standalone business. It's always connected to an account, right? You cannot have payments without an account, or at least a wallet or something like that. And there's one other thing that has driven the changes in the market, and that is what's happening with the KYC cost. That is happening with the KYC cost, increasing heavily the cost price of accounts, of transactions. That is also having a serious influence on the business model. Where in the good old days, opening an account for somebody or another entity, yeah, it was more or less marginal cost. You had to do some checks. But today, with all the checks that you need to do, the additional compliance checks, KYC, CDD, monitoring, the cost price has dramatically increased right now. And while at the same time, interest revenues have basically dried up because of negative rates, this might also change the model for the future. So it's not only payments that are changing, but also the underlying account and the dynamics in that.
Interesting. So, I mean, from that perspective, then, if a bank can't make its typical margins from where it might have got quite a steady flow of income, how do you think banks are going to change in terms of looking to offer up new services? And are we going to start to see banks actually become more integrated into a person's daily life, offering various different verticals or tokenization within the payment to like loyalty schemes, for instance, to add that value added um, effective solution at the end of a payment?
Yeah, yeah, I do think so. We call this beyond banking service. A lot of banks have tried, by the way, all kinds of loyalty activities. It is pretty difficult because in the end, we are not the center of the universe. It's our customers who are the center of the universe. They buy uh, uh, either at a retail shop, or our corporate customers are buying goods for their businesses, and we need to be where they are. So if you create a loyalty scheme for yourself, yeah, it's interesting, but a merchant will always say, well, and what about the other 80% or 90%, or in some cases 60% of the market? How do they get along? What did help, and that's, I think, the advantage of open banking coming towards us. It's becoming more and more simple, based on the new technology, to offer these kinds of services with a simple API instead of forcing everybody to use either standard XYZ. You now can combine, saying in an app of a supermarket, multiple APIs towards multiple banks, and whether you use card X or Y or payments method A or B, you are getting the rewards that you need. And we're actually also investing in these kind of opportunities. And again, it differs still per market whether they pick up or not. But indeed, this is the way to look at it. Purely monetizing, trying to monetize just on a payment, that is very, very difficult. It is and will become even more a commodity. So, and then basic economic rules say you need to start thinking about additional services, and that's exactly what we're doing.
Excellent. And do you think that's actually going to play into the traditional banks um, And the typical high street banks, who a lot of talk went to, for instance, the challenger banks getting market share, especially in the UK when they came along. So, oh, their customer experience suite is so good, they're going to get a market share, but ultimately they can't offer up those extra services that are going to start to make money. Do you think this is actually a chance for the traditional banks that can offer up these services to really become reinvigorated in the economy and industry?
What we're seeing right now in times of crisis, people turn towards let's say their safest bet, and the safest bet is right now what you call or we call the traditional banks. We basically have all the services to offer. We can help you in multiple ways, and although the challenger banks, which I highly respect, because they're really good when it comes to UX, and all kinds of other features that they've got, you can see that they're also struggling to get their compliance house in order. The freemium model that they're using, or free model or freemium model, at a certain point in time, they also need to switch to start charging fees. So more and more, there becomes a level playing field between the different parties. But let's be clear, we're carefully watching all these challenger banks, and they actually do challenge us. And on the other hand, ING is one of the companies that is ahead when it comes to digitization. So we take pride in being ahead of the game of some of the challenger banks as well. But we can definitely keep on learning from them.
Yeah, and in fact, following on from that, I was actually going to say, ING, you're always up for numerous awards for for being some of the most innovative banks in the world. When it comes to payments, where do you look to around the world for inspiration for the next big thing that you think might revolutionize banking, be it retail or in commercial?
Yeah, it's a very good question. By the
Difficult
way,
one.
yeah, no, maybe even not. I think in our culture and our attitude, it says we're always open to change. That is one. Second, we do not allow a not invented here syndrome. So we're working in 40 countries. So if you're working in 40 countries across the world, on the retail and wholesale side, there you can see so many things that are happening there. And instead of from, let's say, HQ saying this is the way we should do it, we cherish what is different, and we want to understand what is different. So that is one. So it's also part of our corporate culture and DNA. The other point is keep on focusing on customer pain points. That is where all the inspiration comes from, despite the fact that you think you're pretty good. If you keep on listening continuously to what your customers are saying and what kind of customer survey method you use, that is really important, even more important than technology push. Technology is important as an enabler, but it's the customer who tells you where things go wrong. But we look everywhere. I've been, and not only myself, we've been in when the whole Silicon Valley thing started. We looked at the big techs, we looked at the fintechs, we look at smaller companies, we look in Asia what is happening, which is, by the way, also a remarkable place to see all kinds of things that are happening. We keep our eyes wide open, and we're always open to change, I would say. And with our own innovations, whether it's zero proof knowledge or fin or invisible tickets or whatever, we're trying to do things on our own and also learn what works and what not.
Interesting. And lastly, if I can ask, as you mentioned, spread out over 40 different markets. What's the kind of decision process of taking a technology from somewhere, for instance, China and its QR code? And is there ever that kind of temptation to say, why don't we just try it in Europe? It can work. Let's be the first. Let's just do it properly. Is there ever that temptation, and how do you ever try and work that out?
Well, this is the famous just try it and then fail fast kind of attitude. The point with payments, of course, it is You cannot introduce something at a large scale if you don't know if it's really working and really working well. But we encourage our staff, and not only our staff, but also the let's say the group of 200 plus fintechs to experiment. And you can also experiment without having to build anything. Just try it on paper. Do people like it? Is there a response? Are there multiple ways of just trying it? But we would never introduce something on a very broader scale without having it properly tested. And that's also the good thing about having 40 markets. You can test it in a market, see if it works, and then you move to a different one. That's actually what we did with Yolt. We started in the UK, pretty small. When we saw the traction coming in the UK, then we moved to Europe, and started in France and Italy and all these other countries. That's the way to do it. You need to try.
Oh, absolutely brilliant. And well, Mark, thank you very much for your time. I think that's all we've got time for. And to everyone watching, thank you. Make sure to catch all the rest of our virtual arenas at www.fintechf.com and YouTube, of course. And one last time, thank you very much, Mark, for joining me. I hope you've had a good time. And hopefully I'll see you soon at a FinTech conference in the near future. Thank you.
Thank you.
Bye.